Greetings traders, welcome to this installment of the Polaris Trading Group PTG University Educational Series. Today's topic will be the open range strategy, and we'll be looking at the S&P E-mini futures on a 5-minute chart. And the trade platform we'll be looking at and using today will be NinjaTrader. Today's Thursday, March 13th, 2014. Just want to get some disclaimers out of the way. Trading futures and options is speculative in nature and involves substantial risk of loss. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. Past performance is not indicative of future results, and today's commentaries are educational in nature and are designed to contribute to your understanding of financial markets, technical analysis, and the Polaris Trading Group methodology. So with that out of the way, let's go right to the charts. Okay, so what we have here is the S&P E-mini 5-minute chart today, Thursday, March 13th, 2014. And today we had a substantial sell-off after an opening gap up. Now, one of the key areas for traders to understand is how to trade the opening range sequence. Alright, so there's a couple segments to it. The first 5-minute time slice is referred to the opening range rotation, and that's simply a period where all the pent-up orders, buy and sell from all around the world, come together, and based upon everybody's decision making overnight, decide whether or not they want to buy it, sell it, and so forth on the opening. The key component of that 5-minute rotation is the high, low, and the midpoint. Now the midpoint becomes a key marker for us, and it's simply a representation of the sentiment on the opening rotation. Now the key to that is, once that's established, does price stay above it, or does price trade below it? And if it's above it, it's bullish. Below it is essentially bearish, because it shows that depending upon the context that it's being used in, will determine what the intention of the market makers and the larger institutional players of what they want to do during that opening range. So as you can see today, we had a gap up today. Very minor though, and after that first 5-minute high, low, midpoint became established here at 1872.50, you notice here that the prices were not able to hold above that dotted line there, the opening range midpoint, and in fact traded below and stayed below. Not only did that happen, it also pulled the volume trend POC, point of control, and the midpoint line, this gray ratcheting line, down as well. This sets the tone for a bearish condition, and even though the price had gapped up, could not hold that gap, could not hold that 5-minute average, and as such, prices were more likely to pull back than they were to push higher. So how do we trade that? And that's the key for us. Well, as long as we observe that price had not been able to get above that 5-minute average at 72.50, all right, in our trading room we were discussing the short side. All right, so we were looking for opportunities on a pullback to look for shorting. And they were within the context of these 5-minute candles here. We were able to establish some short positions in our trading room using a premium type trade strategy on our tick charts. Okay, and the initial goal here, target wise off the opening, would be simply getting back down to the closing point of control, or a VWAP level, okay, which is essentially right here at about the 62, 63 zone, Okay, and you can clearly see that prices did get down there, and we met our initial objective coming off that opening range strategy. Certainly the market went a lot lower, and although the opening range strategy is designed to get us on the correct side of the market action early, does not necessarily predict how far prices will travel. All right, but what we want to do is we need to initially determine what side of the market we want to be trading from as early as we can after identifying that opening range. Let's take a look at yesterday, and you can see very similar to today, prices here yesterday in opening had gapped down. It actually gapped down into a key reference zone around the 1858s. The big institutions came in, responded to that early weakness, came back, bought it back up, and as you can see, the cyan lines and dot here establishes our opening range rotation. Prices continue to trade above that 5-minute average, and then what we did yesterday in our trading was we were looking to buy pullbacks. Okay, so again, most people think, hey, we have a bearish gap down. They want to sell every opportunity as price goes up, getting short. Well, what they don't realize is that prices are holding above that key marker. Okay, now that's a key marker for us here at Polaris Trading Group, and we use that to our advantage. So we were looking to buy pullbacks here, having the confidence that prices were more likely to rise since the VWAP and the midpoint were also rising at the same time. So holding above that midpoint of the opening range with a rising volume trend point of control and midpoint gives us the confidence to buy that pullback until that level is violated. Okay, so it's a very simple rule set. We look for that 5-minute high-low average and then simply ask the question by observation, is it holding above or below that 5-minute average? Now there are times where prices oscillate back around that 5-minute average, and in those particular cases on those days, price action will end up ranging. Okay, so today we had a gap up with a failure to hold that gap above that 5-minute average, setting up a nice short condition, which our traders in our room took advantage of. All right, so it's as simple as that. Does not have to be more complicated. Just simply looking at a key benchmark, our key anchor point price for the day, and determining whether or not prices are trading above or below that level, and are they holding above or below that level. And giving the context of the particular opening, all right, which we'll review at another video update, given the context, we'll determine whether or not the probabilities favor continuation of a gap or the reversal of a gap. Okay, so I hope that helps, and we'll see everybody next time for the next PTG University Educational Series update. Good trading, everybody.